Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Anthony Denier, CEO of Weeble, to discuss the surge in trends with retail trading. Anthony, great to see you as always. Welcome back to Trade Talks.
Thanks for having me back, Jill.
And how much does retail trading attribute to volume, and how does it compare to 2019? It certainly has been a key story with financial media this year.
Yeah, I mean, 2020 has been the year of the retail trader, right? Not to put it lightly. A little history, go back 10 years and, having 10% of retail allocated volume to the exchanges was a big deal. Then over the last probably 5 years, we saw that allocation go to about 15%. A lot of that had to do with the fact that we're seeing a really strong bull market over the last decade. A lot of people got involved. A lot of retail traders got involved, especially as they kind of worked their way out of the financial crisis. And now, in 2020, we have many, many different factors. And we're up at 20% right now in retail volume, which is significant.
It certainly is. And why do you think we've seen such a surge in 2020?
Couple different reasons. We can talk about time. People have more time allocation in their day. There's less distractions going on. And this is all referring obviously to COVID and the pandemic. There's the opportunity of, we've seen, the dot-com bubble and what the market did several years after. We see the financial crisis in 2008-09. So, where it was only 5 years later. And, when the markets took their lows in March, it signaled a lot of retail investors that maybe didn't have any skin in the game yet to say, hey, this is an opportunity that I've seen replay over and over the course of the last 15 or 20 years. I'm going to use this opportunity to get in. And that's exactly what we saw. And not only that, you also have a lot more barriers being lowered in terms of companies like Weeble, companies like Robinhood, right? I mean, where it's so easy to get involved in investing right on your phone, no commission, ease of entry, all kind of factor in. And probably the biggest, which I think is not talked about enough, is the government backstop that we've been seeing during all this with the stimulus programs, with the low interest rates. It seems like a safer bet now for retail investors to get in, knowing that there is a little bit of government help if things go the wrong way.
Let's discuss trends and how it's disrupting the traditional retail model.
Yeah, well, there's a bunch of trends going on right now, and I think they're all really, really positive for the retail investor. You have mobile. Mobile has become front and center, and we've been seeing it across all different parts of the economy, and most recently in retail trading and investing. You have more of a personalized experience when it comes to the way people invest, and there's a lot of different platforms that allow people just to invest passively, just in what they're using their debit card to purchase, right? So a whole new avenue of retail investors to get involved, which completely has disrupted the model. And I would say barriers that were previously in place, having to do with the commissions, the platform fees, the non-activity fees that used to be the norm for the industry, that are now gone.
Anthony, do retail traders really disrupt stock pricing? And isn't it a good thing to have retail investors more involved in the market?
Well, because retail investors during 2020 are 20%, there's limited price action that a retail investor will place in, say, a heavily traded name that's a blue chip name in one of the indices. But when you start talking about smaller names, or you start talking about low price stocks, you tend to see a lot more retail action, and the retail investor can have a big influence on the price of those stocks. And one thing where retail investors, again, I think that is not talked about enough, is the effects that you can't see from a balance sheet or an EPS, right? That cultural shift, whether you're moving to vegan products or to lifestyle products or to environmentally friendly products, right? Not even to name specific companies, but we all know who's big electronic vehicle makers are, and what their stock price has done, despite the EPS and the income in the income statement showing that valuation was absurdly high. Retail investors did not think so.
And to wrap up, where does Weeble fit into the retail trading ecosystem?
Well, Weeble has always differentiated ourselves in the retail space, and besides being one of the original mobile first platforms for trading and investing, we took down our barriers from the beginning with the zero commission, zero platform fee model. And we always look to give investors as much information as possible, rather than the gamification we see in some of the similar mobile platforms. So you can have a true, rich, robust trading and investing experience on Weeble, again, for not having, for no barrier of entry, and a mobile first experience.
All right, Anthony, great to see you. Thanks for joining us on Trade Talks.
Thanks for having me, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.